Welcome to weekly view on markets. Nifty index closed at record high about 24,000 during this week and broader market consolidated. Bank Nifty did not participate in the rally. It corrected a bit. Mid cap and small cap indices closed flat with small gains. IT sector and FMCG sector led the rally during this week and they gained more than 3%. Technical charts structure indicates that market may trade in a small range at the current levels for few more weeks. Q1 result of companies will be the trigger for a stock specific movement in the coming week. Any dip is to be used for buying good stocks. Mutual fund investors should continue their SIPs and remain invested for good returns in the coming years as our economy is on a high growth path. Now let us look at performance of indices. Nifty closed at 24,502 with a gain of 178 points, that is 0.73%. Bank Nifty corrected with 381 points, closed at 52,278, loss of 0.72%. Mid cap indices gained 84 points, small cap index gained 7 points. So mid cap and small cap indices were consolidating. India VIX has slightly gone up. It is at 13.72 during this week. Now let us look at different sectors. FMCG gained the most, that is 3.56%. Information technology gained about 3.45%. Public sector index gained about 2.52%. Oil and gas gained about 2.46%. Media, consumption, pharma, energy all gained around 1%. Metal sector lost about 2.63%. PSU realty index lost about 2.32%. PSU banks lost about 2.09%. Auto index lost about 1%. Manufacturing also lost about 0.7%. So there were equal sectors in loss and equal sectors in gain. So this indicates that market is set for a consolidation. We may see a range bound movement in the coming week. Now let us look at technical charts. This is a daily chart of Nifty index. We can see that Nifty index after crossing the long term resistance level has given a good rally, and after that we can see here there are equal number of green candles and red candles, and the price range is very small. So this indicates that Nifty index may consolidate for few more days. This is the chart of Nifty mid cap index. Mid cap index also we can see series of red candles have got formed during current week, and even though there is no much drop in the prices, it indicates that selling is coming at the higher levels. So this index also may consolidate for a few more days. This is the chart of Nifty small cap index. Here also we can see that the chart is indicating a kind of consolidation, and this may continue. Based on the quarterly result, there could be stock specific movements in the mid cap and small cap sectors. This is the daily chart of Bank Nifty index. Bank Nifty index, after hitting at around 53,300, has come down, and it is likely to take support at around 52 to 52,200 levels. So this around this level, it is a good opportunity for traders to buy Bank Nifty. And bigger banks will be announcing results in next 10 days, and one should look out for the Q1 results of the banks before taking any position. Now let us look at some of the fundamental factors. This week, RBI governor has stated that Indian macroeconomic fundamentals are quite strong, and growth in the economy is picking up. He is slightly worried about the inflation front, especially food and vegetable inflation is trending to be higher and it is persistent. So he says that it is still we have to wait for some more time, and when there is a confidence that inflation is trending down, then only RBI will think of cutting interest rates. So RBI forex reserves is at a record high of 657.15 billions. It is up by 3 billion during this week. So it is a comfortable forex reserve position for RBI. Foreign exchange rate is steady at around 83.54 per dollar, and dollar index is at around 104.84. Brent crude price is also quite steady at around $85.38 per barrel. Gold price is at 73,285 for 10 grams, 24 carat. Gold prices have gone up significantly in last 1.5 year. One is due to the Ukraine war, and then Israel and Hamas conflict. Whenever there is a war-like situation, the money will move to the gold. Gold is considered as a safe asset class. And secondly, most of the central banks have been buying gold, including RBI. So, because of consistent buying by different central banks, they are trying to increase the gold deposits. Because of that, the gold prices has seen a steady demand and has given a good run up in last 1.5 year. FIIs bought 3,844 crore during this week, and DI also brought 5,391 crore in equity. So consistent buying by FII and DII may give a support to the market, and there may not be any big correction. CPI inflation comes in at 5.08. It has moved up from 4.75. This is one of the worrying factor for RBI governor, and unless this consumer price based inflation comes down, RBI may not cut rates. But one good thing that has happened is that inflation in US market has come down, and there is a hope that rates in US may come down. Because of this, we have seen a strong rally in IT sector during this week, and also because of the good monsoons, we have seen rally in the FMCG sector. The rural demand is likely to pick up. That will help FMCG sector stocks. And IIP growth has come in at 5.9, which is quite good. So this is consistent with the PMI manufacturing index, which has come at 58.3. And also services index is above 60.2. That means service sector, there is a strong growth. There is expansion in the economy. TCS result and US inflation data has driven IT stocks. Good rainfall is a positive indicator for the market, and specifically for FMCG stocks. FMCG stocks have been consolidating for now almost 2 years. Now, with the good monsoon, the rural demand and urban demand, they may pick up, and we may see a rally in the FMCG stocks. So this may be a good time to look at quality FMCG stocks to invest. And mutual fund investors should continue their SIPs. They should not worry about these day-to-day small up and downs in the market. They will make very good returns in the coming years as our economy is picking up. The growth is picking up. Macroeconomic fundamentals are quite strong. There is no possibility of a big correction in our markets unless some unexpected events happen globally or in India. Otherwise, market may correct 5%, 10%, but it will see a lot of buying, lot of money is there waiting for to be invested in the markets. So mutual fund investors should continue with their investments. This is all for this week. If you like my video, please subscribe to my channel. You can like my channel, refer to your friends. If you have any questions, you can ask. We'll meet again next week. Thank you.